Good morning and welcome to the FIB Strategist technical overview on the US tech shares. So this is basically my current watch list. I'm just going to go alphabetical and run through them one at a time. Alright, so starting with Apple, we can just see Apple finding strong resistance in that distribution zone between that resistance there at 157.90 and then some support at 148.58. And then we see on Friday it closed well below that, gapping down to that 146.71 close. Currently the next important level is 144.13, which is that 38% retracement there. And basically that is just a fib drawn from that swing high to that swing low. That counts as a 38% retracement, 61% retracement, which also offered us that resistance. So on Apple, I am looking to buy in lower down. I'm hoping it comes back to that 125 support area. And if it doesn't, if it bounces off the 38% level, for instance, goes up through 50, I can buy into that again. Or I can look at a break above 156.80, which is that 61% retracement. The next one is Applied Materials. So AMAT, it's had a pretty good run from those lows in October. Below 75 Rand there, little retracement going through halfway up, and then we just saw that break attempting to get above that 127 extension, which is a fib drawn from that swing high to that swing low. Extension 127 holding firm there, the market not able to push AMAT through that. Just coming off at the moment, looking for a retracement back to that 61.8% level, which if that offers us some support, then I can get into AMAT. I prefer to look for that 102 level or around that 38% level. Sorry, we'll just go back there. So down to that 38% level, 102, 103. Down there, quite keen to buy in. If it does break below that, the next important level for me is the zero level there at 93.78, 94, somewhere around there. On the breakouts, I'm not too sure whether I want to have a go at it above that 116. I'll have a look. If that does happen, then I'll have to have a look and see what the structure is at the time. But for now, I expect that to come off a little bit more, at least to the 61. If it breaks below that, then 102 comes into target, and I can look at buying off those lows. AMD. So AMD has also had a pretty decent run. If we zoom out a little bit, we can just see ABC up. And that hit the ABC target at 88.69, the 88.70. So that little move there was complete. And now we're pulling back just below the 50% there, and it's becoming a bit of a pivotal zone. And we can see historically found some resistance there back in November last year. And just a couple of days ago, closing below that 50% level. So at the moment, there's no real clarity here. My preferred buy area is between 73.73 and that support level at 62.02. So I would like to see AMD get back below that 38% level down into the 65s. That would be great for me to look for some early entries. So either reversal of that level, we can just see here there was the hammer on the double bottom there. So something similar down at 65 would be great. If it doesn't do that, then I can use any one of those three levels as either support or as a resistance breakout. Now on the fundamental side, AMD a bit expensive now on a PE of 26. That is a trailing PE, 26 years. A little bit expensive, which is why I prefer to get it down closer to the 60 level. Then we have a look at Google, and we can just see Google's become very messy. That's dropped off quite a bit there from that 150 high, and just really battling to find some proper support and accumulation. So we have the accumulation zone right down at the lows, so between 86 and 83.60 or so. We're getting very close now, closing 89 on Friday, and just holding up on that 78% retracement. So anything can happen from here. I am looking for some form of buy signals. So either trigger off the support there, candle pattern, bullish engulfing, hammer, that type of thing. If it does get below the 88, then I'll start looking at that level down at the 1. And that accumulation zone can really offer some support to the stock. So I don't want to be left behind by a quick move to the upside. So I'll start looking at orders over the next day or two. Then IBM also had a good run in the end of last year and has sold off since then. Fundamentally, it's reasonably priced at a P of 14, and my preferred buy area is down at that 78 level, so just above 126 there, 126.50. Down there, I'm quite keen to look for some form of buy trigger. So again, either a candle pattern reversal there or something along those lines. If I don't see anything like that, I can start looking at the 2 moving averages, the 8 crossing above the 21 as an early entry. The stop loss for that would have to be on the swing low. Like most of my trades, I look for those ultimate lows, and it has to close below that before I look at stopping out. So for now, IBM, just waiting for it to find some form of base. The other thing to look at here is IBM's dividend yield. IBM is more of a seriously longer term view. So I am looking to build positions in that over the next sort of 2 to 3 years. At 5% dividend yield, it becomes attractive again. Here we go to Intel. So unfortunately for Intel, it has dropped below that support level, down there at 25.25. If it does drop lower, there are some lower levels down there, down to 22. That's the 161 extension, and it's just a fib from that low to that swing high there, and then extended to the downside. If it does find support around this 25 level, there'll be some sort of buy trigger back above old support. So either it acts as resistance going forward, or it acts as a trigger point for the next buy entry there. Juniper Networks consolidating. Considering how the rest of the tech sector looks at the moment, Juniper holding up quite well, and in that trading range between 30.30 and that high there at 33.92. But I think that 33.41 is the better range. So close above that 33.41, I'll be looking for longs, targeting up to that 27. It'll be 38.56. Just that previous swing high there. So we're about halfway. You can see the 50% level, just below 32 there. So for now, buy entries. I've got my longs in place. Stop losses way down at the lows at 25.15. This one I'm looking for a break to the upside, maybe off support at 30.30, or a close again above 31.88. And then Meta is one of those stocks, if you miss it, you really miss it. Some really good trading signals down at the lows here, breakaway gap, continuation gaps, and then it just consolidated for 2 months and then just broke off. So the results were pretty good at the end of January, and that gap is a result of that. Getting above that distribution zone quite strongly, and then not breaking the highs there at 196, 197. Above that, I'm actually looking for the 200 mark. Close above 200, break of that high to add into that trade. Otherwise, a return back to close that gap at 153.58. This is what I would prefer to do, either there at that 152 level or down at the 120 level. And if I don't see it getting much lower than that, excuse me, but if it does, the next buy level is all the way down at 88. So at this point, Meta's trend is pretty strong. Looking for some area to add in, either off that support or some form of breakout. At this point, it is not clear to me. We have a look at Microsoft, chatbot and all that stuff, driving the Microsoft breakout. Just didn't hold on to that, and obviously, that AI stuff is still new tech, being tested out in the marketplace. I think it's going to be a little while still before it kicks in. But obviously, Microsoft and Google very much geared towards the AI side of things, so worth looking at just on that basis. My buy level for Microsoft, I'm looking for support down at 231. If it gets down there, I will be looking to buy into that. If it doesn't get down there, next breakout is only up at 265. Then we've got Micron Technologies, yeah, buy area down 50, that's a 53, 54, 56 over there, that 38% level. Bounce off that. If it does break lower, then I've got that gap to fill down to 51. So for now, just waiting to see what happens to Micron. Again, it's slightly higher risk trade. The company is not solidly in place at the moment, but it does have a pretty good PE at 10 and almost nothing dividend yield. So I'm still keen to get involved with Micron. Still big on the AI side of things, metaverse and all that future stuff. So we've got the double bottom just that held firm at 48.90, and then the neckline for that is that resistance at 64.52. So close above 64.52 I'd like to add in there. Then we've got Nvidia. It's kind of like any of the other major tech players. Nvidia just really accelerating. Very expensive, high PE ratio back to 93. To me, that's a little bit crazy. So I'm not chasing this one. Preferable buying area down at 150. A little breakaway gap there to get it going. And then the results came out and the market overvaluing the stock once again on the release of results. I would expect it to at least try and fill that gap back down to support at 206.43. I love Nvidia, I love what they're doing, but I don't really want to jump into the share at these high valuations. So I am looking for some form of relief on this one, maybe a nice little break down to 160, 150, ultimately down to 140 is my preferred buy area. Chasing it up at these high levels is not my game, so I want to see that pulling off before buying into that. Then we've got Qualcomm. Also, big sell-off, nice little higher low there, higher high. So a little ABC completed, that 61.8 level holding. Share coming off back down to that 38% level at 122.94. My preferred buy area is somewhere between 117 and sort of 106, 107. So until that happens, I'll just be holding on to it. Breakouts, if it does find some decent support, that's an old distribution zone, and that can offer consolidation, support to resistance. If it gets back above that, I'll have a look at adding into that as part of it, adding into the trend. So let's just see, waiting to see what the price is going to do there. Back above that distribution zone, I might be interested in just adding a little bit. But preferably I want to see it pulling back down below that 110. We've got Roblox if you're into really high risk shares. These guys aren't making money yet. They were a bit of a 2020 phenomenon when we had lockdowns. They've got the first really operating metaverse. And they're working strongly at improving it and getting more people on board. But as people have gone back to work in that, obviously their player levels have dropped off. Number of participants is shrinking, but in the long run I still expect this company to have a major impact. If someone like Microsoft, Meta or Google buy them out, then they've got all that money behind them. That would certainly be good for shareholders. So at this point I really am not chasing this one in the breakouts. I want to get involved below 28 and above 25, 22. If it drops lower, all the better for me. So if it does get down below that support level, I can reassess. But for now, I'm not chasing the breakouts. I want to see that retracing off a little bit. And especially when you look at these long-term trades, you do have to think of things like carry cost and time value of money and all that kind of stuff. So Roblox could end up being a very, very long-term hold. So the position size will be made accordingly, smaller than normal. And then we've got Tesla, everybody's favorite share to hate. Very similar to the likes of Nvidia. If you miss it, you really miss it. Good breakaway gaps going through there, continuation gaps, and then just finding some resistance at the halfway mark. So just back to that swing high, that swing low, halfway back, really found solid resistance there. Ideally, we would want to buy Tesla somewhere down at 111, somewhere between 102, 111 down there. Realistically, I'm quite prepared to have a go at it if it gets down to that 154.40, into that gap, that zone there, 146.09. So if it does come and close that window, I'll be quite happy to have a look at some longs then. On the upside, breakout trades, I might have a little nibble on a 61% breakout there, targeting the 100% mark, but it's not my favorite play. I would prefer to see that coming off a little bit more. But markets do consolidate in two ways. They either not consolidate, sorry, they revalue themselves in two ways, either by price dropping off or into a medium-term consolidation. So if it does consolidate and I get a time retracement, I'll be quite happy to then have a look at a breakout above the 50% level there, at around 209, 210. Taiwan Semiconductors, TSM, they've had a few problems. Their results were pretty decent. You can see the market bought them very quickly off the lows in October. Nice little ABC extended target all the way up there. But there were quite a few companies that have got this big candle. Just take a note of that date, the 24th of Jan. There was some serious finger trouble on the NASDAQ, and some of these shares had unrealistic price moves. TSM was one of those that suffered on that. Broke through resistance there and then just tumbled after the open. The volumes in those opening ranges were just almost zero. So it was a little bit of finger trouble and some errors on the NASDAQ. But since then, we've seen it breaking back below the distribution zone there, back below the 38% retracement. So one at the bottom, zero at the top, 38% retracement, and then the market closing up above it. A little abandoned baby at the top there, and just closing back below the 38%. So my ideal buying level is all the way down at support at around 72, 73. If it breaks below that, then I'll start looking at that range at around 60. And then Verizon's purely a dividend play. It's not for everybody. The value of the stock is very much depressed, PE of 7.5, but a very attractive dividend yield of 6.7. So I've got it in my portfolio. It helps me pay my carry costs. To have a stock that pays out a 6% dividend yield is usually good for long-term holding costs. So I'm quite happy to just hold on to that. If it does drop back below that accumulation zone there, so that low being the 78% level, 37.20 or so, below that, I'll be quite happy to accumulate some more there and see if I can squeeze a dividend yield of 8%. And then lastly, Western Digital, storage company. So they sell all your hard drives and flash drives and that kind of stuff, solid state drives and whatever. And again, this is a longer term play. They've been punished a little bit since 2021. Obviously, as the world locked down, now we're looking at bottlenecks and supply problems and whatever. But Western Digital is also one of those stocks, similar to Nvidia. I don't want to be chasing, similar to Roblox. They are profitable, however, so P of 17. So they are making some money. I'd prefer to get them down at that 32 to 30 level. I won't be chasing it any time before that. It's below that 38% retracement. If it gets down to that zone, 30 to 32, I'd be quite happy to grab some there. And again, it's a long-term view. I'd be looking to hold this 2 to 3 years. Well, thank you very much for watching. And if you want to know when we actually fire these triggers, you're welcome to join us, www.thefibstrategist.co.za, and join our signal service there. Have a lacquer day.